Hi, this is Mike Bjorkman. Thanks so much for watching SCV TV and our segment Minute with Mike. Today I'm with Keith Renno from Pacific Funding Mortgage Division. We just talked a little bit about FHA loans. Today, also, we want to talk to you about VA loans. I don't know about you, but have you seen VA loans coming up more and more lately?
Absolutely.
Okay.
Quite a few veterans out there.
Absolutely. It's amazing how many we have here in Santa Clarita. It seems like every week we're closing an escrow with a veteran. So there's some interesting points we have to talk about to let the general public know, because so many people are eligible for this great loan and don't know about it. The two things I wanted to start out with are obviously no down payment and how low these interest rates are. And not only how low they are, but is there mortgage insurance tied to that like there is FHA?
Those are the two key points with VA financing. No down payment required, which is the only program out there right now that has a no down payment requirement, and no mortgage insurance. On other loan products, conventional FHA, on a $300,000 home purchase, mortgage insurance can be $200 to $300 a month. So with the VA, no mortgage insurance, a huge savings.
Right. We just had a client yesterday call us and say, Mike, I was qualifying for conventional financing, and then I thought about VA, and I do qualify. He ran the two mortgage calculators side by side, the one on our app that's available to download off the Apple Store, but he said it saved him $400 a month for the exact same house, same exact price. And obviously we're going to go VA on that. So that's crazy. Yep. Talk to me about qualifying. I know we talked in FHA, they were a little more lenient on the income to debt ratios. How does that affect with VA?
Same thing with VA. VA is extremely lenient when it comes to the debt to income ratios. You can actually get into, well into the 50s, nearly 60% on the debt to income ratios. VA, unlike any other program, looks at not only the debt to income ratios, but the disposable income. So we as well factor in how much the maintenance might be for a given property. When we look at someone's pay stubs, we factor in the deductions that they're taking, their Fed deductions, how much they might be contributing towards their retirement plan. So the VA does look at, and it's something we need to pay close attention to, how much disposable income they'll have towards other payments they might have, just their overall lifestyle. But still, there's a lot of flexibility with VA. It's never really an issue, just something we need to pay attention to.
Right. Something else that I like to point out to people, same with FHA, most of the buyers think that it's for first-time buyers only. Can you explain that?
Not true at all. As long as we have the eligibility through the VA certificate, then they can use their VA loan. So not just for first-time home buyers. It is for an owner-occupied property. But if they have other investment properties, they can purchase VA as long as they're approved through the VA and have that eligibility certificate.
So pay attention to that, folks. That's a huge deal. It's not just a first-time buyer program. Now, we talked before about a surviving spouse. Talk to us about that a little bit.
Yep, the individuals that qualify for the VA loan are the veterans themselves or their surviving spouse. So if the veteran passes away, the spouse now has the VA benefit.
Pretty cool, huh? A lot of people don't know these things. Yeah. Something else that was amazing to me the other day, since 2005, I've been doing a lot of short sales. Well, now it's 2013. How many people that I look back on that I sold their home short sales, now we're calling them back up saying, hey, it's time to buy again. How many years after a short sale does it take for somebody to qualify VA?
VA is very lenient there as well, only 2 years.
2 years. And FHA is 3, right?
FHA is 3 years.
That's a whole nother year.
Yep.
So that's a fantastic point. Talk to me about condos in VA. Is it similar to FHA?
Similar to FHA, although throughout the Santa Clarita Valley, throughout Southern California, there are more condos on the VA approved list compared to FHA. FHA, there was a big expiration date that hit, or quite a few expiration dates that hit throughout 2012, even started back in 2011. VA, that was not the case. So there are many more communities approved for VA financing.
Okay, interesting. I wanted to point that out. One other thing I wanted to ask you, and I can't remember the answer to this one. If my dad was a veteran and I wanted to buy a home, can my dad co-sign for me, or does my dad have to buy the home VA, and can I go on that loan with him?
No, the only individuals that can be a part of a VA loan are the veterans themselves or their spouses.
Okay, just wanted to clear that up.
So VA does not allow for non-occupant co-mortgagers like an FHA loan might.
Okay, so as far as interest rates, is VA typically less than FHA and conventional?
They're all right about the same right now. Actually, VA is a hair lower than the conventional rates, especially when you're looking at condos.
Yeah, that's what I wanted to point out last night. We were looking at that. I was blown away. It seems like, what, 3.25%, something around there?
Yeah, we just locked in quite a few clients at 3.25% on their VAs.
And that's crazy. And just so you know, we're filming this on, what, January 3rd, 2013. So if you watch us a year from now, rates are, I'm sure, going to be higher. Just so you know, I don't want to give any wrong numbers out. So what else do we know about VA? Is there anything that our viewers want to know about qualifying? Does it work for any house? Is it 1 to 4 units like FHA?
It's 1 to 4 units.
So if they found a duplex, they could purchase a duplex and rent the other side out?
Exactly. Yeah.
All right.
The only other thing with VA, it's something that Mike and I, representing you, need to be aware of, and that's there are a few items in terms of closing costs that the veteran themselves cannot pay for. They're called the VA non-allowables. The seller can pay those. Us as the lender can contribute towards those. So it's just something that we need to be aware of when we're presenting the offer and structuring the overall transaction.
Right. And then I guess the only thing that I want to point out before we go is VA might take a little bit longer than a conventional loan sometimes, right?
With some lenders, that is the case. With us, we are structured to provide the VA loan. In terms of the extra time, we're only talking about a day or two because the appraisal, when it's done, it gets signed off by the VA themselves and then gets sent back to us as the lender. So there's typically only a few days there compared to maybe a conventional loan or an FHA loan. Not a major time difference.
Okay. Well, you heard it, folks. So a VA loan is another fantastic option. Call us for sure. If they didn't get to see the FHA segment and only this one, how do they get a hold of you?
Yeah, you can contact me direct. My direct line is 661-513-3118, or visit our media site, www.rennoteam.com. A lot of information there pertaining to credit, VA loans, various ways that you can get in touch with us.
And then I'll put in one more plug for Keith. Again, agents, if you're new or need a boost, Keith and I use a lot of the same marketing, a lot of the same social media, such as the media page videos, marketing our listings. So I'm sure he'd be more than happy to help you out, boost up your business a little bit as well. So give him a call for that. Well, I'm Mike Bjorkman. My cell phone is 661-212-8075. My website, SantaClaritaRealEstate.com. Thanks for watching SCV TV and Minute with Mike. Have a great day.
Thank you.